So one of the concerns that privately owned businesses have about going public is they're concerned, one, about compliance costs, and two, about the scrutiny and the oversight and having to behave yourself. What's your experience been in terms of the difference and the transition?
Yeah, look, there's definitely a lot more on the compliance side as far as half yearly. Being a service company, we only actually have to release financial statements twice a year, not like a normal resources, which would be four times a year. So there's a lot more governance around those two, I guess, reporting documents that we need to put together. Yeah. But as far as that, we still own 54% of the business as the founding shareholders. So I guess the public listed scrutiny that we get from having a lot of shareholders that really want to talk to you and really want to push you for information and what's going on, we probably haven't hit that yet. Hopefully in the next few years, once we create some more liquidity in the business, we'll get to the point where we do have a larger shareholding base, and I think it will get a lot, not a lot more difficult, but it'll definitely be a lot more outwards facing then. At the moment, we're pretty tightly held with some good funds that are backing us and have sort of been with us since day one, and they're backing us as a growth business. So we'll see how that sort of pans out over the next couple of years.
Nice. So you had to put together a board. You had a board. It was the original shareholders.
Yep.
What changed, and where is it at the moment?
Yeah, so I guess we got into the market straight away for a solid chairman, and I think we did pretty well in finding Mark Connolly there, who's very world renowned in the resources sector, especially in the gold sector, and what he's achieved before. So bringing Mark in has been a really successful, a good decision we've made. He's added some strength to the business. He's helped me sort of navigate, I guess, some of the queries with regards to public life, which has been good. Luke Graham, non-executive director, so he was actually with us for 18 months before we listed, and knows our business very similar to the business that he used to run before, which was Sedgman Group. So he's been pretty good to help sort of strengthen up and bolster the front end of the business. But I think now the three board members are all executive directors. So Dean and Brett have been on board with us for a while and been in the business. But I think as we now sort of mature as a group, after 12 months in, we will be now adding more strength to the board. A lot of investors and a lot of external opinion is that you need more independence on your board and less executive control. So we'll probably be looking at that sort of over the next 12 months to transition and I guess build some more strength into the board itself and add a couple of members.
Nice. So what advice would you give to a privately owned business that was thinking about perhaps listing their business to either raise capital or to assist with the growth? What advice would you give them?
What advice? Make sure it's right for you first. Make sure you're doing it for the right reasons. That's probably the first thing, and I guess in our case, I think we have done it for the right reasons, and we did go through quite an extensive process of private equity, potential backdoor listings and things like that, and decided to do a clean IPO, or through the front door as most people call it. Another bit of advice would probably be make sure that you pick your right lead broking sort of firm to manage the IPO, and we had Canaccord, and I think that's been pretty successful to date. They were pretty easy to deal with, and we formed a very good relationship with them, so that was good. One thing I don't think we did probably as well, and everyone always wants to sort of hear the good things, but I think one of the things we didn't do very well was have the right split of institutional versus retail on the share registry in the structure. You do need a good mix of both, and I think we were too heavily weighted to the institutional side, which can have its advantages, but I think to have more retail investment, to have more sort of shares trading every day on a daily basis is something that we probably got a bit wrong. So for those companies that are out there looking to list, make sure you get that right shareholder structure mix. I don't know what the actual right mix is, but I think we're too heavily overweight institutional. So, and I guess the next thing is make sure that you're ready for it.
And what does that mean?
Well, as a business itself, 7-8 years in the seat, we understand the business well. We think we've got a very strong business model that can stand the test of time. And although I guess we haven't moved much on the share market, as far as incremental share increase in value at the moment, we do think that our business model is going to stand the test of time, and that good things will come now that we're fully funded and we've got the opportunity to look more strategically at the future. So don't rush into it. So I think some people would like the notoriety. I like the additional capital at an earlier stage of their business, but I don't think that we would have been mature enough as a business to list it earlier. I guess some businesses may be, but in our case, I think we hit it at the right time. So
yeah, absolutely perfect.
Yeah,
beautiful.
That was a quick drive, mate.
It goes fast when you're just chatting.